Your index fund just sold stocks you own to buy SpaceX and you didn't get a say. Yesterday, Vanguard's total stock market fund and their growth fund were eligible to add SpaceX. 5 trading days after the IPO, that's the rule. And when SpaceX gets added, the fund doesn't have a choice. It has to buy it. Over $3 trillion in assets track those indices. And that was just phase 1. Another reason, I fucking hate this market. And if you're new here, I'm Nate. I've been around this market for years. I dig into the moves the people at the top are making so you don't have to read the fine print yourself. So here's what nobody explained to you about the SpaceX IPO. Everyone focused on listing day. The $75 billion raise, the stock popping 19% or so, all these headlines. It was the show. But the show was never the whole story. Because before the IPO even happened, retail investors were front-loading money into anything space and tech related for weeks. Then on listing day, they sold those positions to chase SpaceX. That week was the weakest retail buying week we've seen since March 2020. People liquidated their winners just to get in. But that was phase 1, discretionary money moving. Phase 2 is what's happening right now. And this is the part that hits your retirement account. When SpaceX gets added to an index, the funds tracking that index, they have to buy it. But they don't just have extra cash sitting around. To buy SpaceX, they have to sell something else. They sell a little bit of everything you already own across the entire fund. Your Apple might get trimmed, your Microsoft will get trimmed, your Nvidia gets trimmed, but not because those companies did anything wrong, because the rules say SpaceX has to come in. And it doesn't stop with Vanguard. In about 10 trading days, the NASDAQ 100 does the same thing. QQQ, the biggest tech ETF in the world, $500 billion in assets, has to add SpaceX too. Another $8 to $12 billion in forced buying. Same mechanics. Sell what you own, buy SpaceX, and that hits around early July. So let me say that clearly. An estimated $22 to $27 billion or so in automatic mechanical buying is flowing into a single stock over a few weeks. A stock that lost $4.3 billion last quarter. A stock trading at over 90 times revenue, and you're paying for it whether you want to or not, because if you own VTI or QQQ, the trade is being made for you. And here's what should really bother you. 4 different index providers changed their rules in the same quarter to make this happen. These rules didn't exist a year ago. They were rewritten specifically so that mega IPOs with tiny floats could get fast-tracked into your portfolio. The Financial Times literally called it the biggest bag holder exercise of all time. Now, am I saying sell your index funds? Am I saying SpaceX is a bad company? I don't love it, but no. Starlink is real. I guess the rocket business is real. But you should understand the mechanics, because this isn't investing. This is plumbing. And the plumbing was redesigned this year so that one company could get into your portfolio before the ink on the IPO was even dry. I'm not a financial advisor. I'm not telling you to buy or sell anything. But round 2 hits in early July with QQQ, and no one's gonna warn you when it does. So drop a follow and hate the market with me.